Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW, soit S008 traders, and our website is www.stochastic-magd.com for general trading, www.24Elliott Waves for Elliott Wave trading. Today is the 27th of April 2014 and the time in London is 15:32 p.m. The title of the video is how to forecast the fifth Elliott wave, how one can forecast accurately the fifth Elliott wave. Before we continue, I would like to say to traders that this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. Very, very important. Welcome to 24Elliott Wave, the place where we boost wave trading skills. It is one thing to know about the wave theory, all right, and another to forecast the market using the wave principle. Recently, I have recorded a video that we call how to forecast the fourth Elliott wave. Today, we will talk about how we can forecast accurately the fifth Elliott wave. All right. Before you disagree with me, I would like to highlight to traders that there are many ways, various ways, traders can forecast the fifth Elliott wave. All right. We have a guideline that we follow, and I'm going to share my guideline with traders, the guideline that we follow to forecast the fifth Elliott wave. It is important for traders also to understand that the wave theory is a guidelines, it's not a science. So when we are using the wave patterns to forecast the market, we shouldn't assume anything. We must keep our eyes on the price itself and combine the technical analysis and the fundamental analysis. Google Finance, Yahoo Finance. Very, very important, okay? So do not use the technical alone, do not use the wave pattern alone, combine the wave theory with the trading triangle, the market first, the sector, before the individual financial instrument, the heart of the trading triangle, the market first, the sector, before the heart of the trading triangle is the market leaders, okay, the economy news, and the fundamentals, okay? Very important. How do we forecast the fifth Elliott wave? All right, let's start counting wave, and I draw some line on my chart. So I draw this is the first wave, second wave, third wave, a fourth wave, and a fifth wave, okay? So I'm going to remove the fifth wave from this chart because we want to know how we forecast the fifth wave. So before we can forecast the fifth wave, we must be able to count accurately the first wave, the second wave, the third wave, and the fourth wave. All right. So if we fail to count correctly, these are first four waves, we are likely to make a wrong decision when we are forecasting the fifth wave. All right. So it is important for traders to learn how to count waves, and you can go to our website www.24elliottwave.com or www.youtube.com/24elliottwave to know how to count wave. Okay. Very, very important. Okay. So we want to count correctly the first wave, the second wave, the third wave, and the fourth wave. One thing I need to mention to traders for wave count, it is crucial for traders to understand all the 13 specific Elliott wave patterns. All right, so that will help you to know whether the fifth wave, the second wave has ended or the fourth wave has ended. You should be able to know how to forecast the fourth wave also, and how to forecast the third wave and how to count wave. After that, once you count the first wave, second wave, third wave, and the fourth wave, you are now ready, to forecast the end of the fifth wave. All right. So how do we forecast the fifth wave? So we count the first wave, second wave, third wave, fourth wave. We know that according to the theory, all right, the theory is different from the reality of this messy market. Okay, the third wave, which is the black line here, should be the longest wave. All right. So to forecast the fifth wave, if the fifth wave is extended, or if the fifth wave, let's start again. To forecast the fifth wave, if the third wave, is extended, Okay, how do we forecast the fifth wave? So in this scenario, we count the first wave, the second wave, and in normal condition, the third wave is the longest. If the third wave is extended, okay, it's not always extended. It shouldn't be the shortest wave, but sometimes it's not extended, okay? So what the first approach to forecast the first Elliott wave is under the assumption that the third wave has been extended, all right? So here, the third wave has been extended, is the longest wave, all right? We know that the first wave, the third wave, and the fifth wave can be extended, okay? So if the first wave is not extended, normally, generally, all the time, most of the time, 70% of the time, the third wave will be extended. So the first approach to forecast the fifth wave is, okay, when the third wave is extended. How do we do that, okay? So we will join the high of the first wave and the high of the third wave that has been extended. So we will expect, okay, the fifth wave, when it's underway, okay, to find a resistance along, okay, this line here. So you see the blue line that I draw. If you like, I can color in a different color so you can see on your chart, okay. I'll color it in green. Okay, you see the green line here, the diagonal green line here, okay. So once we count the first wave, the second wave, the third wave, and the fourth wave, we want to forecast, okay, the end of the fifth wave. Because the third wave is extended, repeat, the third wave has been extended, we'll join the high of the first wave and the high of the third wave. And as the fifth wave is underway, because we know how to forecast the fourth wave, and we know that the fourth wave has ended, we will now expect the fifth wave to find a resistance somewhere, repeat, somewhere along this green line that we have drawn by joining the high of the first wave and the high of the third wave. This is one approach to forecast the fifth wave. It makes sense? It is also simple, all right? Join the high of the first wave and the high of the extended third wave and just project it into the future. Now that the third wave, the fifth wave is underway, we will expect it to find a resistance somewhere along this, green line. There are many ways we can forecast the fifth wave. Another way is that we know that the theory, the Elliott wave theory also stated that sometimes we see very often, 70% of the time, there is what we call the equality between the first wave and the fifth wave. What do I mean by that? The magnitude or the length of the fifth wave is usually equal to the magnitude or the length of the fifth wave. So here we see that the first wave went from here to here. That's the length of the first wave, all right? So from here to here, that's the length of the first wave. So according to the theory, very often we have equality between the first wave and the fifth wave. So we will expect the distance from here to here to be equal to the distance from here to the edge of our green line. So we can measure the length of the first wave and project it somewhere here, okay, onto our target line here. So with the equality between the first wave and the fifth wave, we can also forecast the end of the fifth wave. So I have used, the length of the first wave. We can also use what I like to call the magnitude, okay? So price went up from $10 to $40, okay? That's $30 price move. That's about the magnitude. So if the first wave went up from $10 to $30 to $40, that's a $30 price move. We'll expect the fifth wave also to be like a $30 price move. This is about the equality between the first wave and the fifth wave. So we can use the length of the first wave and also the magnitude of the first wave using the equality theory of the wave principle. So how we can use the equality, how can we use that? If you learn a bit of geometry, you can just draw a horizontal line on top of the first wave and another horizontal line at the low of the first wave. So the first wave went up from here to here, and then you will do, how do I say this to you? you project this vertical down like this. That's the magnitude. So we have a kind of triangle. It went up to here, and we draw the horizontal. So you see we have a kind of small triangle here, and we will move the height of this triangle and project it here and say this is the magnitude of the first wave. So we project it here. We know that there's equality between the first wave and the fifth wave. So the equality is either the length or the magnitude. So we can have this information on our chart. So I can set my target here, where I can place one target here using the magnitude, expecting the fifth wave to achieve, if this is a $30 price move, the fifth wave also to extend the $30 price move, to somewhere along this green line. But I can just put the height that I've shown you here to the beginning, to the starting point of the fifth wave, and have my target somewhere here. Ladies and gentlemen, the Elliott wave theory is a theory, and when we are applying it, we must pay attention to market participants. Human being, can change their mind, can do things differently. And also, talking about the trading triangle, the economy news can change the dynamics of the market. So a stock that we are trading, if they come out with some crazy economy news, if the fundamentals are not solid, the price is not going to go up. If the market sentiment has changed, you may see something different from the theory. All right? You understand? So this is how we focus the fifth wave. I don't want to confuse you, so I'll set it now. If you do not understand anything, put your comment below, ask question below, and I will get back to you. That's how we will do it. But I think I've said enough and covered enough. So this one approach, which is projecting joining the high of the first wave and the high of the third wave, expecting the fifth wave to touch it somewhere here. The second approach is to use the theory itself, the equality between the first wave and the fifth wave. Very, very important. With this information, we can navigate through this messy market. So it's nice to know that the price is likely to go to X or Y or Z, But it doesn't mean that the price will definitely hit the target. But we are watching that the reaction of the price when the price is approaching that target zone. Because why? According to the market stable data, the price is always moving from A to B. But we do not want to forget the fundamental, because this is a technical analysis, all right? The purest technical analysis, the Elliott wave analysis, but we want to combine the technical and the fundamental without discounting, the first, source of the price move, which are human being or market participant. Let's move on. There's another approach traders can use to forecast the fifth Elliott wave, which is a little bit complicated. This is about combining the fractal pattern and the Elliott wave theory to forecast the next price move. I have demonstrated to traders how to combine the fractals and the wave theory to forecast the price move. So we can use the fractal pattern. So this is a video here on our website, www.24elliottwave.com, also on our YouTube channel, 24elliottwave YouTube channel, how to combine fractals and the wave principle. The stock that I have used that time is Biogen stock, and I have accurately used the fractal pattern and the Elliott wave theory to forecast this stock that it will go to the level of 317 and up to the level of 350, exactly on the dot. You can feel that, you can see that I'm a bit excited about it, because in this scenario, the market has just, tick every box, The wave theory was accurate in this case, but sometimes it's not always the case. I have also talked about something very important, which is that when we count a wave on one time frame, when we count, we see an Elliott wave cycle or a multi-wave on another time frame. That multi-wave or that Elliott wave cycle on one time frame can be a minor wave on another time frame. So on this monthly chart, when I was demonstrating how to combine the fractals and the wave principles, we were using the monthly chart, and we have shown traders that, in fact, they accounted 5 waves to forecast the price up to the level of $350. So from here, 1, 2, 3, 4, 5. But that 1, 2, 3, 4, 5 waves on the monthly chart is just the third wave on the yearly chart. So from here, we are now on the yearly chart. From here to here, that third Elliott wave is just being divided into 5 minor waves, because the wave theory is a fractal theory. The wave pattern are fractal patterns. So it's very important to understand what is taking place, okay, so we do not make a wrong decision. So now on this yearly chart, we can see that we have now third wave. So we have first wave, second wave, third wave. How do we forecast the end of the fifth wave for this biogen stock? How do we forecast the fourth Elliott wave? I've already recorded a video about that. Trader will know exactly what to do. Go to our YouTube channel, 24 Elliott wave. So now we're expecting it to pull back on the yearly chart. Repeat, the wave count on the monthly chart will show a different pattern, but the wave count on the yearly chart is also showing a different pattern. But that is a continuation. That's what we call the fractal patterns. All right, so it's also a type of a multiple time frame trading, also a top-down trading method, okay? So when we are using the Elliott wave, we do not stack on one time frame. We use different time frame to see the whole pattern together. It's a puzzle, okay? But it's very simple puzzle if you follow the price self, the number one indicator. So on this yearly chart, we have first wave, second wave, third wave. How do we forecast the end of the fifth wave? This is the exercise trader can do. So we will expect the fifth wave to find a resistance somewhere, if I color it also in green, like I did before on the monthly chart. Okay, we will expect the fifth wave when the fourth wave is completed, because the fourth wave is not yet completed for this stock on the yearly chart. Repeat, yearly chart. Do not forget, monthly chart, different pattern. Yearly chart, different pattern. Minor, okay, wave, higher degree waves, okay? So when the fourth wave is finally completed for this biogen stock, how do we forecast, okay, the fifth wave? We will expect the fifth wave to find a resistance somewhere along here. But there is another thing also. We can see, we talk about the magnitude, which means the stock went up, let's see, went up from the level of $6, roughly $6 during the first wave, and went up to $85. So let's roughly like a $80 price move, okay? Let's put it like $80 price move. So using the magnitude to set a target, we will expect $80 price move minimum, okay? We will expect, okay? We will set a target, $80 price move. So from the 263 plus $80, we will set a magnitude target. But we will also use, this is about using the equality between the first wave and the fifth wave. Based on the magnitude, we can also use the length, which is, you see the distance from here to here, which is a very, very short one, like this. That's the length of the first wave, using the equality based on the length, using the equality based on the price, you see. So remember everything we have said, and also joining the top of the first wave and the third wave. This is how we will set different target and watch the reaction of the price as the price is approaching at that level. There is another way to forecast the fifth wave. Ladies and gentlemen, let's move back to the monthly chart. Because you are my friend, I want to share everything with you without, keeping any secret for myself. When it comes to Elliott wave trading, I do not have any secrets, okay? Okay? All right? So there's another approach, the fourth way to forecast the fifth wave. What's that, okay? I have drawn another line here. So in this scenario, this is my first wave. So here, from here to here, follow me carefully. From here to here, that's my first wave. From here to here, that's the second wave. And from here to here, that's the third wave. And from here to here, that's the fourth wave. How do we forecast the fifth wave? The last, okay, method to forecast the fifth wave. As I explained to you, based on the Elliott wave extensions theory, all right, the first wave, the third wave, and the fifth wave can be extended. So, for instance, if the first wave is not extended, normally the third wave normally should be extended. 70% of the time, the third wave should be extended. Now, the third wave also is not extended. You can see that I've drawn the third wave a little bit shorter compared to this one here. Is to illustrate the fact that the third wave is not extended. So the first demonstration, the first method to forecast the Elliott wave joining the high of the first wave and the third wave, when the third wave is extended, here we're going to use another method. In this scenario, the third wave is not extended. The theory stated that clearly that the third wave should not be the shortest wave, but it's not always extended, but generally extended. Are you confused? You do not be confused. So, all right, let me drink something here. Delicious. Okay, let's move on. This allows me to breathe in and to breathe out as I'm trying to communicate with you, how we can forecast the fifth wave. All right. So when the third wave is not extended, how do we forecast, the end of the fifth wave? Because if the third wave is not, the first wave is not extended, the third wave also is not extended, the fifth wave has a high chance to be extended. So these measuring stick to forecast the fifth wave will not be enough, which means the fifth wave will go above our green, diagonal line. So how do we handle that? There's a way around it, So we will, when the fifth wave is extended, how do we forecast the end of the extended fifth wave? That's the correct way to put it to you. How do we forecast the end of the extended, fifth Elliott wave? This is, the last method to forecast the end of the fifth wave. We will join again the high, of the first wave, and also we will join the high of the first wave and the high of the third wave. But we will do something else instead of using the equality, because we know that the fifth wave is going to be extended, which means it's not going to be equal to the length of the first wave. It's going to be higher than the first wave based on the magnitude and the length, because it's going to be extended. Last lap, the last lap. You play computer games, fast, So in that case, so what I'm going to do now, I'm going to remove my first drawing so I don't have too much mess on my chart. Moment please, traders, as I'm clearing some of my drawing on my chart. This Biogen stock, we are still on a monthly chart, but this time I'm drawing on this chart to demonstrate to traders how do we forecast the extended, a fifth wave. So we join the high of the first wave and the high of the third wave, but we will do something else. We will draw another line at the low of the fourth wave and make that line parallel to the first line that we have drawn. Parallel. Beautiful, isn't it? Parallel, So if I color it, I'm running out of ocean. Some colors doesn't come out clear, and some trader will complain about that. Color it in black. Beautiful. So what we have done, we have joined the high of the first wave and the high of the third wave. With this allow us to draw the first diagonal black line. Are you with me? Then we will draw another line from the low of the fourth wave. We make that line parallel to the first line here. This is it. Beautiful. Now we have a channel. You understand that because the first wave is not extended and the third wave is not extended, the fifth wave is likely, not 100%, but likely. It's all based on the fundamental, companies selling, making money, people want to buy more, market sentiment becoming more and more bullish as we reach the fifth wave. Then the fifth wave will be extended, So the theory and the reality of the market. So because the fifth wave will be extended, it's likely to break above, the first line that we have drawn here, And how do we handle that? We will project this channel. You see this channel, the size of this channel. All right. So if you like, I can show you. You see, this is the size of this channel here. We just we project it to the other side. Okay, equal size of that channel, and we draw a line that is parallel. All right, are you getting excited like myself? And we draw a line that is parallel, okay, to the first one. So because it's going to break above the first target trend line, which is this one, we have drawn a channel, okay, which I explained to you already, and we project the equal size of the channel to the other side. Boom. If it goes above, because it's going to be extended, boom, boom, boom. So when the fifth wave is extended, it will be a complex fifth wave formed of 5 Manon waves. 1, 2, 3, 4, 5 waves. Because it's an impulsive wave, can be divided into 5 waves. So when it's extended, you are likely to see goes up, pull back, goes up, pull back, and then have its own fifth wave, the fifth wave of the fifth wave. So what do I mean? Okay, I don't want to talk too long about this because you can go back and watch other videos where I explained this already. So I don't want to dwell on it, okay? Otherwise, we're never going to finish. If it goes above this one, this blue line that I drawn, because it can be extended for a while, okay? So what do we do? Traders who are following and know all this already. So if you are not following us, okay, subscribe to our YouTube channel or subscribe to our 24 Elliott Wave website. Okay, so if it goes above this one, then, okay, game on. It may continue to go up. One thing traders should understand is that as we are drawing a channel, do not forget also the median lines of the channel, the middle line of the channel. Do not forget them. They are also important level. So primary stop there before going to the top of the channel. Do not forget the median lines of the channel. This is how we forecast the fifth wave when, okay, the third wave and the first wave are not extended. This is how we forecast the fifth wave when the fifth wave is extended. So in this video, we have talked about how we forecast the fifth wave when the third wave is extended, okay? We have also talked about how we forecast the fifth wave using the magnitude and the length of the first wave. We have also talked about how we use the fractal pattern to forecast, okay, the fifth wave. In that case, I refer traders back to the video that I call how to combine fractal and the wave principle. We have also talked about how we forecast the fifth wave when the fifth wave is extended or when the first wave and the third wave are not extended. Ladies and gentlemen, this is the end of this video. I hope you have learned something from it and will put it to use, okay, to make excellent trading and investment decisions. The wave theory is a guideline. Traders must pay attention to the fundamental, going to Google Finance, Yahoo Finance, checking Bloomberg and economy news, and using the trading triangle. If you like this video, like it. If you dislike it, dislike it. Your interaction is very important for us, and your comment, we appreciate your feedbacks. Until the next time, enjoy yourself and be very happy. We are the TSTWSYS 008 traders.